All right there, everybody. So what you're looking at on my screen here is a chart of the NASDAQ as we move into Thursday's session over in the United States. A couple of things I want to update you on. This is really a continuation video in regard to some of the discussions that I left you with, not only last week, but also the week before that too. What I'm doing is I'm transitioning over to the ADX and also the CCI panel over on my chart. You can see in the bottom sort of right-hand corner of my screen. Hopefully you can see those two price panels or indicator settings on my screen. The reason I'm showing you this is because the ADX itself, although it does monitor the actual strength of a trend, the legitimacy of a trend, and for the most part we have been obviously front running the breakout of that trend right through to the end of 2019 where we began to liquidate those original positions. Since then, and really coming back into begin 2020, we have done absolutely nothing. It has been a very slow start to this current calendar year, but I think it is for good reason. That reason is what I'm about to show you really over the next maybe 10 to 15 minutes or so. But as you can see, pay attention. Actually, what I'll do in fact is actually remove that of the CCI. You can see right now, you can see is the ADX. But pay attention to this because when I zoom out long enough on the ADX, what you're going to notice is that, really, first of all, you shouldn't pay attention to the price panel up here at the moment. You should more so pay attention to how many times the actual ADX has moved above this horizontal line on my screen down here. The reason there is a horizontal line is because this is the current reading that we are registering on the ADX. You can see we're coming up very close to 66 points. Again, if you look to the left of my screen, pay attention to these calendar dates down here. You can say definitively that there hasn't been all that many times whereby the trend, or at least the legitimacy in terms of extension and momentum, has pushed on just as far as what the NASDAQ is doing right at the current juncture. This is a massive warning signal in and of it. So if you can see this one period over here, this was actually on the bearish meltdown, right, in the Q4 period of 2018. Prior to that, you have to go all the way back to pretty much December, January of 14-15 over here, whereby again the markets began to stagnate before they moved into more or less an entire year's worth or a year and a half's worth of sideways, right, stagnant trading opportunity, whereby we were just stuck in that of a sideways channel consolidation. So again, previous to that, you have to go back to May of 2014, whereby we saw the ADX register at 67. Again, alert, that's only 1 point higher as to where we currently are on the ADX. Have a look at this period over here in particular. If I can zoom on over and actually try on to zoom on in and to actually show you this. But if you have a look at this period here, this is actually going back to 2012 as well. You can see here that for the period of 2 months, the NASDAQ itself, it sold off from about 3,100 points all the way down to 2,700 points during the last time we saw the ADX this high. Again, April 2013, the market, if you can zoom on in, it entered into another correction. April 14, July 14, you can see here, this was the period as the market sort of stagnated at 4,600 points. You can see that we bottomed out all the way down here at 4,250. Can you begin to see the pattern as to when the ADX, which is very rarely as high as what it currently is, what we're currently registering anyway here in the month of January of 2020 in subsequent trading activity that follows not necessarily the next day or the next week, but in most instances the next following at least number of weeks or months. So again, this is a major warning, a major red flag on the NASDAQ itself. It is bad also on the S&P 500. It isn't as bad as what it is on the NASDAQ. You can see on my screen we're printing just below 60 at the moment. We have been a little bit higher on a number of occasions, or at least on a few more occasions than what the NASDAQ is currently printing at the moment. But you can see how all of those times ended. We led into, right, the first drop of 2017. Let me just color coordinate this and try and move this into a better sort of perspective for you. You can see we rallied and then we tanked. All right, that was the massive warning. Another subsequent warning again was on the downside, Q4 2018 sell-off, whereby the ADX was very extended. This marked the bottom of the bearish sell-off and what has been a tremendous period moving into 2019, which we just said farewell to a number of weeks ago in short memory. Now, let me just show you a couple of individual stocks. Obviously, at the moment, we're moving into earnings. All right, this is very important. You can see a couple of companies that have reported, and we have done absolutely nothing. In fact, the only thing we have done, what people may have done, is actually gone long VIX calls. And the reason we're doing that is because instead of actually shorting the actual market indices for the downside play, what we're doing is instead we're trading the volatility, or at least the uptick in volatility, which is going to come about by, again, some very dramatic pullbacks that we expect are going to happen in the market over the next couple of months. So again, if you can buy at least the VIX below 12 or very close to 12, generally this is the resting period. You can consider it that of some form of an ADX setting whereby you get the resting pattern right prior to the ADX turning up, and then you get these big volatility spikes. Obviously, this is the price panel on the right-hand side of my screen, but you get these resting patterns or periods, and then you get the volatility uptick. So again, if you wanted to draw a trend line on this volatility move to the downside, even though generally you don't do this is obviously a byproduct of the actual volatility in the options market underpinned by the S&P 500. But if you look at this as a downward sort of move on the VIX at the moment, you can see that we're moving towards the apex. Now, again, you don't traditionally trade this as you would an individual stock. However, it does have merit in and of itself. So we've sort of upticked, albeit very briefly, over the past 3 sessions or so. If we definitively see the markets themselves turn down, and again, I haven't even spoken about the candlesticks, but pay attention to this. What we have seen on Friday is that of a hangman type of doji that you can see over here on Friday's session. We have a spinning top as at Tuesday. Obviously, the markets were closed on Monday in observance of Martin Luther King Day. And then really what was interesting to see was that the markets themselves, they gapped up. They're up about 0.4% to begin. That's meant to say 0.4 to begin at least Wednesday's session. However, what happened was that they closed, or at least they pushed up intra-session, which is defined by this upper wick. But in fact, all of these markets, they closed at least quite sort of negatively, or at least weakly, so to speak, during Wednesday's session. This is the chart of the NASDAQ. It was a positive print of 14 points. However, again, very similar to that of a bearish counterattack, or at least the intra-session reversal that took place just yesterday. Again, the S&P 500, you've got that sort of jump up to the upside. You can see the exhaustion in these candlesticks. Another doji candlestick as at yesterday, and then a pseudo sort of shooting star. You can see that we actually broke above the intra-session high of Friday and also Tuesday. What happened? It was the intra-session reversal, and pretty much we closed where we did. As at Tuesday, we closed up 0.96 points, but we've got this dark real body candlestick color to the S&P 500. Again, it's not immediate weakness. However, it would not surprise me to see this market have a long day dark Morobozu, whereby on the VIX, which again is the volatility index, you see a big spike in that, which is going to pay off or really help people who've taken out some calls on those positions. Hopefully you've pushed it out to about April in the expiration, whereby you can simply just hold those around that 12 handle at the moment and just wait for that volatility spike when it chooses to do so. So again, it's been a very slow beginning to 2020. I can't really apologize for that, except just to sort of help you sort of side on, or at least move to the side of caution at this particular time and find yourself really being inactive or outside of the market domain, especially if you want to trade long. And I still suppose, or at least propose, that you should be looking at least bullishly sort of orientated for 2020, but now is not the time to actually be allocating capital in positions. Wait for this to pull back, wait for the ADX signal to pay off. It is tremendously powerful. And when that dip comes, depending on if we slice through the 50, right, exponential moving average, and if we come on back down to close some of these windows, or at least some of these strategic entries that are on my charts, if I can zoom on out and show you them sort of large enough, or at least we're going to talk about this when the move actually happens, it's going to be a great time for you to actually jump back into the market. Now, getting back into some of these individual stocks, I did go off on a little bit of a tangent talking about the VIX. I've just covered Netflix. You can see it pulling back. You've got this bullish upward trend. Completely expected. We've got no open positions in Netflix. Microsoft, pay attention to this. You've got this hangman candlestick. This is going back to Friday last week. You've got this shooting star candlestick as at Tuesday being yesterday, and then you've got this engulfing candlestick on Wednesday. So again, this is the 3-day series of bearish candlestick patterns, whereby if you look at the ADX as well, and I'm going to show you this on Google, it's absolutely off the chain. You can see that Microsoft doesn't really get up as far or as high or as overextended on the ADX as what we are currently printing. So we've got a series of serious warning signals right now. IBM had a pretty impressive gap up, still not looking to trade anything long at this particular point. If IBM, however, comes back down to close its window, so be it, that'll be fine. Hopefully that works in synchronization with the market pullback. Then we can just look to actually trade off this open window, but for the time being, just leave it all alone. On Google, you can see it's absolutely taken off. These are all retrospective bullish trade triggers. Yes, we've had to close some of these out prior to earnings, but we have been on the right side of this trend for quite some time. If I flick on over again to the ADX, I just wanted to show you this because what we've picked up on in Pro is that when you think about the NASDAQ and just sort of the market in and of itself, or at least being the weakest of the three closely followed market indices, you should have a look at some of the market leaders, or historically speaking, the market leaders that are encompassed within that of the NASDAQ, to see whether or not they're actually showing similar signals as well. So when you do this on Google, what I've done, I've actually is rearranged this sort of horizontal line above the ADX. Again, I'll try my best to bring it back into perspective for you by not removing the CCI. However, I'll bring it down for you. So just pay attention to the ADX. And if you look at this, just going back, well, I mean, first of all, to 2016, there was one other time, pardon me, whereby we were up this elevated on Google. You can see over here, April of 2017. What happened? We went up, we came back down. Much like the market during this time, it rallied, it failed, it came back down to retest the support area, which was when the basing pattern, or formed the basing pattern for not only Google, but also the market as a whole. Have a look at December of 2017. We rallied, ADX was off the chain. What happened? It sold off, it more or less crashed again for a number of months as it stabilized prior to continuing. And that's pretty much it that you can see on my oscillator panel at the moment. If I zoom out and take this chart back even further, you can just see, hopefully, in terms of trend momentum, trend strength, trend legitimacy, that just looking at it through the sort of the eyes of the ADX, very rarely do we get this overbought, and very rarely do we push as far as what we have done for Google itself. I mean, I'm going all the way back to the depths of at least coming out of the GFC back in 2009. You can still see this horizontal line on my panel, just to show you that we still haven't seen some of the extreme accelerations even coming out of the GFC to what we're currently printing here, right, in the current calendar year of 2020. So again, obviously, overwhelmingly, the majority of people are still net long. They're doing silly things. I'm trying to warn you not to be one of those people. Disney's correcting a little bit. It's doing a stealth correction, which is fine. Again, no market positions in this, no market positions in COP. In fact, this magnetic colored line, it's coming back. So the magnet of this colored line, like it acted in September, not so much during the month of December, but here we are in the month of January. I think we're going to overshoot this and come back down to this green rectangular box. So you can see some of these individual stocks, they're actually stealth correcting already. Caterpillar, outside day engulfing candlestick, a long day dark Morobozu, it's pulling back. Where is it pulling back to? Who knows? We have earnings scheduled. If we didn't have earnings scheduled, there was a chance, based on the market correction that I assume is going to happen, we could come back to 122. But at the moment anyway, we're still stuck largely in this rectangular pattern here on my screen. So I mean, we're still not breaking down out of these patterns, but we're starting to see some material candlestick sort of deterioration after, of course, this bump that we've seen across the board in the US. And for the better part, global markets as well. Baidu, have a look at these signals. I mean, these are all warning signals. These are all sort of canaries in the coal mine, and there's a lot of them showing up in these individual stocks. All right, have a look at Boeing Airlines. It actually broke down below that support area. Again, no individual trades on this stock. Amazon, now that we have seen a little bit of a peak here, this is probably going to be that failed second move, coming in below, or at least shy of 1,900 points. So again, if you see Amazon, we have been bullish on this stock at the moment. We have no trade, but it wouldn't surprise me if this is the neckline of a pullback, which is going to take us back down to 1,775. Write that down. Pay close attention to that. And also to conclude with, I know I've been speaking for a little bit, just have a look at the ADX plateauing up and around this area. Historically speaking, Apple can move a lot further. Have a look at this back and prior to the Q4 bloodbath, okay, as the ADX was up here at about 80, right, prior to, of course, this big pullback. And again, you can listen to the analysis videos back during this time, because we spoke about this prior to the move happening. But very rarely do you see the ADX up at this area. But more importantly, very rarely do you see it actually stagnate and move sideways. So we're starting to see some interesting predicaments sort of setting up on the indicator price panel, whereby generally you get the spikes and then you get the sell-offs. You get the spikes, or at least the pullbacks, back down into the resting period, which again is sitting here at about 20 on the price panel on the right-hand side of my screen. So again, get the tick up, it abruptly turns down, the market resets, and then again it turns up, saying it likes the move, it resets. It's just an ebb and flow sort of relationship that's picked up on the ADX. But very rarely, again, just to repeat myself, do you see it just stagnate moving sideways. So we'll see what that leads to. I'm not going to tell you what it leads to. I think you can sort of ascertain for yourself, given the situation so far, at least the narrative or the theme that I'm speaking about here as we move into Thursday's session. I'll be absolutely shocked, and I know there's people who will remind me that it hasn't pulled back yet. But again, It's sort of short orientated or short side on your behalf if you can't see sort of the larger picture. We saw the larger picture in 2019. We saw the larger picture prior to the breakout in October. And now again, just because we may be one of the first people to suggest this, by all means, we're not going to be shocked when it does arrive. Okay, and just because you're sitting on your hands to at least begin 2020 doesn't mean that you're not going to end it or move through it very profitably. It's just the timing of the market. And again, it's the antithesis of how we sort of began the calendar year of 2019 after the meltdown. It is the polar opposite after the melt up. We're at least thinking that in Fibonacci terms, if you wanted to retrace this as a 0.382 or 38.2 or 618, or even a 0.5 of this measured move, the beginning of the sentence being this candlestick, and of course the ending of this sentence, which may or may not have actually set up as at yesterday's candlestick on Wednesday, time will tell. You can take this range, you can measure it, you can backtrack or at least find those retracement values, and they would be legitimate targets. In fact, I assume they are going to not only overlap with the bullish trend line that we've been working off, but also probably the back test of the past resistance area and give us again confirmation of the confluence as to where X marks the spot for this market to pull on back on into. All right, so again, I just threw a bit of analysis at you. Hopefully it's not overwhelming at all, but if I can just surmise this, congratulations if you haven't been tempted into, or at least if you haven't actioned, of course, the temptation of doing things at the moment. And if there was one trade, at least personally that I'm in, and I've been speaking about in pro, it's the VIX trade. And that's what I feel comfortable doing. Not actually trading against the direction of the prevailing trend can be very dangerous, but in fact, just playing volatility with long, obviously, sort of options with expiration, right? Personally, they're pushed out to April for me. And I'm just waiting to sort of sell them, to close them once they spike based on this pullback that we're anticipating. All right, so we'll see what happens today as at Thursday. And I'll be back with you probably as at, well, I assume if it's not Thursday, it's going to be Friday when we may see a little bit of volatility come back into the market. Stay patient. We are moving into earnings as well. And for now, anyway, I wish you all a very nice Thursday. All the best. It's James signing.